Good afternoon, traders. I'm Nalnakshi Swami, welcoming to my channel Smart Index Edge. Today, I'm talking about smart money candle. Yes, you heard it right. Have you ever entered a breakout trade with full confidence only to see the market suddenly reverse and hit your stop loss? It is frustrating, right? You followed the chart. The breakout looked strong, but somehow it wasn't real. What if I told you this wasn't bad luck, but a well planned trap set by smart money? In today's video, I'll take you deep inside this trap. We will expose how big institutions manipulate price action, how they use trap candles, trapping highs, and trapping lows to bait retail traders like us into wrong entries. Then a shift comes, but here is the good news. You can spot these traps early and you can trade with smart money instead of being followed by. How to recognize a trap candle setup where retail traders usually get trapped, and how to turn these fake breakouts into high conviction trade entries, we will break down. If you're tired of being on the wrong side of the move, stay with me till the end. This could be the missing piece in your trading journey. Let us break free from the trap and start thinking like smart money. So let us identify smart money candles. We shall become smart. Here in this chart, I'm showing the ICICI Bank chart on the 30 minutes time frame. On second, you can see the wick going top to the first opening bell, opening high, crossing even the high of the previous day high, and entering into the 30th zone. So when the market opens like this and trades, the traders make levels marked in that and immediately they will jump into the trade. That's how this is manipulation to the extreme. It has come down and closed down. How much it might have trapped? It has trapped the stop loss, those people who have sold. It has trapped all the writers' money, call writers' money, and finally closing inside. And it has trapped all the breakout traders' money who have jumped aggressively. They have been squashed. This is how you need to identify these smart candles. Can a code identify smart money candles? I don't think so. Code can identify so many things, but the smart money candles cannot be so easily identified with whatever code, whatever indicator, what you do, because it is context based. You need to get oriented to the chart and you should have eagle eye to spot this smart money. Yesterday, this is the chart of 25,400 call option. I was on this chart because last previous to previous day, that is on Thursday, around exactly 2:42 candle, there was a premium diversion. I had mentioned in my previous video. Here I was expecting some smart money play will be there because Friday was the closing day. Some manipulation because the reason for my anticipation was the underlying Nifty spot came into the order block, and I in my morning video I had mentioned that this is the level 25,327 and mentioned as a flip level, anticipated market to dip down to that level and reverse. But the thing is, they didn't come uh, to that level aggressively because that was a planned trap. See how much time is so much of whipsaw. This is 25,400 call option. You can see from 12 p.m. the market went through sideways till 2 p.m. You can see the whole lot of thing. But the thing I noticed is there was change in behavior of the market, price behavior. See, I started making lower high, marking down. This was the low, lower low, and high was marked here, and low and high was marked, engulfing these lower highs. Then I noticed something is going to change in the market, and I marked this low. Mark this low and see, you can see a very big bull candle around 135 or something, marking the breakout. See, this is the trap. Usually, what happens in the market? Such a big bull candle indicating, most probably in this chart, I have not plotted volume over here, maybe accompanied with volume. See the next candle making open high and trapping down. You can see trapping, you can see the long wick trapping below this low and grabbing all the liquidity. Definitely, retailers, traders, once they notice breakout of the structure, the usual stop loss will be here. They don't keep the stop loss very low. They don't do that. See, lower low, notice the close. Notice the close of this candle. After trapping this candle, see, what you need to do, trapping will occur, but the thing you need to observe what sort of candle has been followed through. You can see a bullish reversal candle, hammer projecting it. Then it was an history. From 137, you can see from 126 and odd, this was the trapped. It trapped to the maximum. The low was 110 or 111. The low was, trapping was to 120 or on something. From there, market rallied up to 185. 185. That was the reversal plotted in the market. This is how smart money, like a shadow, they will be in the market trapping all these retailers, poor retailers. Actually, you can become smart money. You can identify these shadowy figures if you have hawk eye and observation capacity in the market, and what are all the structures where money gets trapped, where retailers get trapped. And if you notice, if you recollect the last slide, The market was plotting higher highs and higher lows. There, the shadowy people, smart money, entered into the market and trapped all the retailers' stop loss. This is how the market works every time. Every time, whether it is an intraday time frame or whether it is on the daily time frame or on the weekly also, or even on the monthly also. Here you can see the big trap candle over here. Big bull candle trapping everything, and next see the intention of the market going down, trapping all the people, trapping on. This is exactly the replica of ICICI Bank, what it did, going above everything. See, the retailers have been taught for the previous day high, previous day low, and even me also, the mark previous day high and previous day low. But of late, I have developed patience, discipline to wait for the candle close. You need to wait for the candle close. Don't hurry yourself. When the bulls are running, some people, many people, it is a bull run, bear run actually. You will get stampede. You should not enter into this sort of move, aggressive move. See, you cannot. See, you will be squashed out. You need to be very careful. So, even with the candlestick, also, trap will be there, structural trap will be there, and even if you see, some people they will see breakout, range breakout trap will be there. You name it, so many types of traps can be identified in the market. Unless you are extra careful, hawk eyed, you will get trapped. What are smart money candles? Trap candle used by institutions signals intent of big players. So once you notice the that type of trap candles, many times I've seen that if the market wants to go up, it traps the low and it starts moving up. If their intention is to go down, it traps the high candle and the intention is it starts moving. So start watching these type of candles. So these are nothing but often involves liquidity grabs and strong reversals because big money has got liquidity problem. You must understand that for us, retailers, there is no dearth for liquidity. For the big players, liquidity is the problem. They have to set the stage or create a drama. No, they have to set a stage and play drama to trap the people. They will induce the people into selling, they trap. They induce the people into buying, they trap. So you need to be very, very extra careful. You need to observe the market very, very thoroughly. It doesn't come by single day observation. For me, by lot of chart reading, lot of observing the market, I'm able to make out these traps. Traps in candles, traps in structure, traps in everything. Traits of these are the traits: liquidity grab, order block, break of structure, fair value gap. Fair value gap means there will be gap within the big huge candle. In between the gap there will be a fair value gap. Probably you might have heard about it. I'm not going to teach all these things, but you should know break of structure means a structure has been higher high structure has been broken out. Strong weak rejections. These are the traits of smart money candles. You should know what are the traits, characters of these smart money candles. An order block is the last bullish or bearish candle before a strong move. Yeah, all of you should have noticed, you might have learned about it. I'm not going to teach order blocks or break of structure or change of character or anything, but you should know the order block is the last bullish or bearish candle before. Suppose order block is the last bearish candle before moving higher and last bullish candle before coming down. These are the order blocks. It represents a zone where institutions enter large position, trigger liquidity hunts. These are the areas, order blocks. The liquidity hunts and then reverse the price direction. That's why I had marked this level on the chart, Nifty chart. I was able to notice that level 25,327 within the zone between the 300 to 327 and 282. They can utilize any level. See, exactly we cannot pinpoint exactly, they will not come to that level. Little bit here and there, but at that at that point, what is the price action? You need to understand what it is doing. If the price dips into the zone and reverses outside, closes outside of the zone, then it is a confirmation that big money has collected the orders, pending orders, and then reverse the price. In a trap setup, the market fakes a breakout. How many times you might have trapped by a big bull candle breaking out of the range, immediately you are entering it only to your, I mean, only to your dismay, it starts coming down, dipping down. So you keep the stop loss and you lose your money. So this is the trap setup, and so many times people are very late to enter into the trade. They get trapped. They see. Actually, what I do is, in when a range is built up, I'm going to keenly observe what sort of range is building, what sort of players, whether it is building a volume, range is building towards the breakdown or breakout. You have to, it comes with practice, it comes with your continuous observation and continuous watching the chart. It is not a single day task. You need to do it. One need to do it to master this. Because we are retail traders are trading with big money. If big money is not there in the market, a range shift will not happen. Range shift or price moving to the upside or the downside will not happen. Price will be stagnated. How many times you might have noticed price gets stagnated? There, when the price gets stagnated, that is the stage created by the big money. They get stake, they don't act, but they will be accumulating or distributing very silently. In between the buy and sell trades happening between the retailers, these people will be like a shadowy figures working, working. Don't think they are absent in the, range when the market goes sideways. Without volume, they will work together. Work together with the retailers. They will be in the market. They are not absent in the market. So, as retailers, we should know what this big money is thinking of. What is their intention? You need to see. Here, in this example, I'm on the daily chart of the, hourly chart of the Nifty, because these are the things. I knew, I had mentioned him in my video, it is the break of the structure. It has been coded over here. I have not written this. I've used a script code to mention this. Break of the structure, a big breakout candle you are seeing, the next candle you can see. This is the order block. This is the order block. After the first breakout of the structure, bullish candle, next last red candle before the market moved higher. This is the level. So what you need to do, everybody does, everybody has been taught that order block zone has been, it is a wide range candle over here extending from 20, probably 25,200 to 300 points range. Within this range, they can select any level. If you go to the lower level, you can pinpoint exact level. Here you can see yesterday the market came down to 25,333. But coming to this zone, coming and reversal, what lot of gimmicks they played in the market only around 240 big breakout were taken place in the 20, even in the underlying you can see the market rallying and closing over here. So I am not convinced by this reversal. I need to be watchful because they have trapped this break of, they have created a break of structure and they have entered inside this. Then tomorrow I am keenly watching what is the intention of the big player. I will watch keenly, then only I will take the trade. I will not get trapped. You can see so many trap candles over here if you keenly observe. Here you can see a trap candle over here. Trapping this dozy. Dozy going above the dozy and trapping going even to the high of the day. That was a drama played on Thursday. You might have noticed how many times it made an high. Twice, thrice it made an high. Finally, it broke down and came down. This was the play which had happened. People actually, in the media, in CNBC TV, they talk about Jane Street trapping and everything. It is there in the market since the market started functioning. No, it is not blocking or anything. It is a news actually, news spread in the media. See, to divert the attention of the retailers. I don't get, distracted by all this news. It will be there in the market. It will not be taken in the market because big money cannot function. Because the problem with the big money is liquidity grab. If they cannot get the liquidity, because they will have thousands crores of shares, for them 1,000 crores of shares buyer has to be there if they want to sell. So they have to create this, they have to do this gimmicks. It is not easy. They will create a liquidity pool, static liquidity or dynamic liquidity in between the candles they will create. So that's how it is. Gaps will be created. They are dynamic liquidities. That's how it is. Market play, it is like that. Market cannot function without liquidity grab or anything. These traps will be there, will be ever, as long as the market is played between the big players and the retailers. You must remember this, right? Break of structure happens when price breaks a previous swing high or low. That is what I explained in the break of structure. I'm not going to read about it. You pause the slide and read it. This is the explanation how they work together. Liquidity grab, order block, fake break of structure, and everything. The market returning to order block, fair value gap, These are all smart money repositions. Smart money will reposition themselves at the discount. So, trader, you should always wait for the discount. Do not enter into the premium prices. Don't do mistake. Don't have FOMO, fear of missing out. You will get the trade if you are a disciplined, patient trader. Patience pays. See, this is the daily chart of Nifty, hourly representation, sorry. Coming to the price returning to the order block, big money repositions themselves. Because you can see on the left side, the price has reversed from this order block, closing above. It has closed above this. Tomorrow, what they can do, they may give a discount, wait for the discount. And this candle, this is the smart money candle. This is the smart money candle you should watch for. Watch for these levels. This is State Bank of India. Sorry, I wrongly mentioned as Nifty. This is the chart of stock chart, State Bank of India. Even the order block was around 804.8 and prices reversed from there. So wait for the retest of this market. Usually smart money will do that to make you people directionless. They will go down and you will sell into the market thinking that these are the lower highs. So can we code this smart money trap candles? It is difficult. Everything can be liquidity sweep can be coded, rejection wicks can be coded, order blocks can be coded, and imbalance zones can be approximately coded, breakup structure can be coded. But smart money candles, it is difficult to code because it is a context based. Trap candles, trap plus reversal plus structure based is smart money candles. Candles that fakes a breakout and reverses hard, used by smart money to trap retailers. This is the image representation, breakout trap candle, sudden reversal candle, bear pouncing upon, but it is not the reality. Sample, you can use this bearish smart money, this one. I have tried to code I asked ChatGPT to code for me to trap the candles, but it is not possible actually, really possible. You have to train yourself to identify the trap candles. You have to see the range and the structure, what structure is building there, how the market will trap. That is by practice, by constant effort, you can master this. Here it is the representation of small representation. You can see it is on July 1st. The trend direction was down, closed here. The market closed in between the range. It has closed in between the range. That's why I always insist traders to mark out the last hour range, last hour high and low, that is from 12 p.m. You should always mark this. See the candle on 2nd July trapping this level. I usually look for this and I'll immediately come to know this is the trap because they have created a equal high in this level. When equal high range has been created, you can see the price coming down, hitting this level and rejecting and hitting this level again and closing bearish. So you definitely retailers will take a position, or call writers will write. Retailers only do this mistake, not the big players. Big players will write far away from the levels. These retailers, they write the call option, and the and breakout traders will be there. Breakout in the present day, they will enter into the market thinking that market will go up. Some people, they will, poor retailers, buy call option, they will be caught wrong foot. Unless you understand the behavior. Intention was down. See, here you see this. It was an intention of the market coming down. Right? So how the market continued from 2 p.m. I mean, from 2nd July, it continued to till Friday. Here, in this example, I am showing you smart money candle on this is June 25th. We are in the July. The market rallied very hard. See, they have taken the liquidity. This is the smart money candle. Once I see this candle, that is a confirmation. I'll start observing the market. See the previous, how they dropped down to the bottom. And then they have taken next day gap up, and they started accumulating this itself is a trap, pushing the market down. Next day opening inside the range, and the market started rallying, continued it. And there is an in between smart money candle indicating the intention of the big player. They took the market towards the high. That is the thing. Limitation of coding SMC is smart money concept. This is smart money candle. It is a contextual logic. At that context, it is very hard to automate it. Very hard to automate. Nothing can be coded. That's why big players are playing the games. It is beyond coding. It is any context can be presented in the market, right? Structure shifts often need human validation. So nothing, ChatGPT cannot become human brain, human mind. Whatever may be the artificial intelligence comes, it cannot mimic the human brain. See, for a chat GPT, if you want to reproduce something, you have to put your brain. You have to ask the chat GPT, artificial intelligence, to do that. If you do not have your own mind, how can chat GPT, artificial intelligence, can replicate the thoughts of yours? It is not possible. It cannot replicate the intelligence. So it is very, very difficult to replicate, automate this. That's why the market is playing with this game. That's why they are comfortable. Smart money is comfortable. It cannot become coded. They will present, but by practice, you can identify the context where they do, at what levels they do, whether this game is played at the order block, whether it is played at the previous day highs, whether it is played in between the ranges. You can identify. You can identify, you can train yourself, you can train your mindset to open your eyes and observe the things. Not every trap is smart money. Sometimes liquidity trap will be there, and there will not be a follow through candle. You will think it is a liquidity trap. It will not be like that. So always price action is like that. It is confirmation. You should get confirmed. So they will also trick this. Some professional traders are trained for this. They know it. They also want to trap these professional traders. That's how it is market. So this is the representation that nothing can be coded. It is beyond human mind. Human mind is super. I'm not telling this, it is this. No one should get frightened by artificial intelligence. Many people talk about this. Many people, they say everything will be gone and they will lose business. No, it's not possible. It is highly impossible to mimic the human brain. So conclusion is trap candles can be coded as smart money candles, but context and reaction are still key. You can code it, but you should start observing that. You can do that. You can trap it. I did it. But you should know how to read them. Combine the code with visual analysis for best results. This is an example. Traps are deceptive. Why I'm telling? See the thing. See what happened in granules of India. Same thing. From it was coming down. From here, the price was coming down. It trapped this previous day high, going about strong bullish candle, strong standing tall, and how many, I don't know. This presentation I've seen many times. How many of you might have seen the price moving down? You get the stock from your screener, you code for it, charting or anything, you get the screener. But if you don't have patience to look for everything, you need to look for this. For this sake, have made an indicator for this identifying the dynamic highs and dynamic lows, and also identifying for gray reversal. Even if I notice this reversal game candle plotting, I'll see for the context. I'll see, wait for the reversal game, reversal candle. That's how it is. I do not enter into the game when it has made an high. I'll wait, always wait for the discount. So here in this same granules India, I'm on the daily chart to show you how trap has been taken place. This was a dozy candle closing lower low. And the next day you can see price opening above the close. You can see the close over here. The game starts. The price had closed over here. Price is opening above and making an high. Unless you have marked this high and low and seen the structure, you cannot trade. Even if you get a stock recommendation from the screener, go to the chart, main chart, find the location, find what is happening. Then it will save you. It will save you everything. Can you see here? This is the last candle on Friday. It has plotted like a reversal candle. See the close, previous day close, closing above this. Close is above the close. At it made an high, trapped this liquidity and closed inside. Closing within the range. Closing within the range of previous day candle, Thursday candle. They are deceptive. Even Nifty has also closed like that. So you need to wait for the confirmation of follow through bullish candle to know that these people have taken full control of the market. It may be a Friday gimmick, short covering rally, shorts have been covered. Here, in this example, I'm showing how the smart money has trapped. This is the daily candle. You can see how it has been trapped and it has pierced inside the bearish candle 50 percentage. So we have read about that piercing pattern, piercing candle pattern. So we will go by that. Immediately, that is a signal candle. Immediately, I will not go into that and I will look for all these levels. It has been marked on my chart. I'll wait patiently whether it is a trap or continuation. So always if you wait patiently, see continuously the trap was taken place. From here it was this dozy and hot inside bar, again trapping this above this candle, above the high of the candle trapping, and the market has moved down. And even on Thursday also, closed here, opened here and trapped. Here it opened low and closed positive. It is also a trap candle. This is also a trap candle. So we need, what is the intention of the candle? We cannot believe it has not done on the running week. It has been done on the closing week of the day, Friday. That's why you need to be extra careful. People do mistake taking long position over the weekend. Don't do that. Don't do that unless there is a strong indication. Wherever I go, wherever I see these traps, they will be presented in so many different ways. Here in this area, you are seeing a big bull candle breaking out of this. Next day, a inside candle trapped. All the bulls are trapped, closing within the range, closing within the range. And then next day you can see the candle opening gap up above all these candles. All might have entered into the long position, finally closing inside. So many times you might have noticed all these things. This is the thing, what is happening in reality. You need to be extra vigilant as an intraday trader. If you are a positional trader, that doesn't matter. You enter at a swing low or something. If you are smart enough to catch the swing low, then you need not. The positional traders will not be at disturb. Only the trapping will happen for the retailer day traders. Here, it is another example of LIC Housing Finance. Can you see over here? LIC Housing Finance, this is an inside bar. This is an example of inside bar on third and the price opening, this is a close, bearish close, near the low, opening here, making a low, trapping here, and then made an higher high. After higher high, the previous to previous day, you can see I'm pointing towards this high. Previous to previous high rallied up to that level. You will be clueless actually. Blindly people take the trade, and whatever they get from the screener, they enter into it. They don't even wait for a minute or something, go and check the charts. They don't do it. They enter into the trade. They will get trapped. Can you see the market flow coming and trapping this low? Previous day and coming, it has not gone below this and coming down. It has trapped the buyers as well as the sellers and closing inside here. That's how it is. That's how the market is here. So you need to be extra vigilant. So finally, market don't just move. They mislead. Only the sharp eye spots the trap before it snaps. This is a code. Write down this code on your table or wherever it is. Stick it onto your laptop. This is the code. Quote. Markets don't just move. They mislead. Only the sharp eye spots the trap before it snaps. So develop the sharp eye. This is also example trapping high and trapping low of the graphical representation. This is the smart money trap. Okay, friends. I am Nalnakshi Swami. Subscribe to my channel Smart Index Edge. Decode the market. Trade smart. Thank you very much. Nalnakshi Swami signing off.